The Global Reset, What Has Come True and What's Still to Come. Opening. When the blueprint became motion. Last time, we opened a 60-page manual called A User's Guide to Restructuring the Global Trading System. It read like a plan. A blueprint to rebalance the world economy, using tariffs, currency, and strategic leverage to restore American competitiveness. But in 2025, that blueprint stopped being a theory. It started becoming reality. Section 1. The first tremors. Every transformation begins quietly. Before anyone announces it, the signals appear in the margins. New trade language, new policy tone, new tension in the data. Since late 2024, those signals have multiplied. The United States has re-entered the trade battlefield, not to defend globalization, but to redesign it. The first front was tariffs. Not random tariffs, but calibrated ones, aimed at nations with persistent surpluses and undervalued currencies. The message? The free ride is over. Tariffs were no longer taboo. They became the price of access, revenue to offset global defense costs, and leverage for new trade deals written on American terms. It was exactly what the Hudson Bay paper predicted. Tariffs not as punishment, but as currency-correcting instruments. The goal? To shift the burden, not just the balance sheet. Section 2. The currency question. Next came the whispers about the dollar. For decades, strong dollar was sacred policy, proof of American might. But Moran's blueprint reframed strength as burden. A strong dollar means weak factories. It means being the lender, banker, and consumer of last resort all at once. By early 2025, that once unthinkable idea had entered official language. Treasury and think tank circles began speaking of currency realignment, not as crisis management, but as strategy. The new narrative. If the world's currencies rise, American industry can breathe again. If the dollar falls moderately, trade and security realign naturally. No formal plaza-style accord has been signed yet, but the ideological ground is shifting. For the first time in a generation, a weaker dollar is not a threat. It's a policy option. Section 3. Trade as security. In the 1990s, trade was economics and defense was geopolitics. Now they are the same battlefield. Behind every trade negotiation lies a defense ledger. Who protects the sea lanes? Who funds the intelligence? Who supplies the weapons? The blueprint predicted this fusion, a new calculus where market access depends on military alignment. And it's already visible. Allies are being offered deeper trade privileges in exchange for higher defense commitments. Those who drift from the alliance face new barriers. Trade, once the bridge, is now the filter. Economic access has become a function of national loyalty. Section 4. Factories stir again. Look closer, and you'll see a faint hum returning to the American heartland. Not a full industrial revival, but a pulse. Announced projects. Semiconductor fabs. Battery plants. Reshoring in pieces. The early fruits of a policy shift decades in the making. Myron's paper called it restoring the tradable sector. It's slow, fragile, and uneven, but directionally real. For the first time in decades, industrial capital is flowing home. Section 5. What hasn't happened yet. But the blueprint is far from complete. The hardest parts haven't arrived. The currency accord, the coordinated revaluation of America's major trading partners, still waits in the shadows. Without it, the dollar remains heavy, and tariffs risk turning into inflation. The reserve system hasn't yet been re-engineered. America still supplies the world's safe assets. Foreign banks still buy its debt. The Triffin dilemma still hums beneath the surface. And manufacturing, though improving, hasn't yet achieved escape velocity. Automation and global inertia keep the gains modest. For every new factory ribbon cutting, there's another closing its doors. The plan is in motion, but not yet in equilibrium. Section 6, the next moves. So what comes next? First, the currency rebalancing trigger. At some point, quietly or publicly, major currencies may be guided upward, yen, euro, yuan, in a managed adjustment. If that happens, the dollar will weaken, exports will rise, and the blueprint will cross its halfway mark. Second, tariffs as negotiation tools. Expect new deals where lower tariffs are exchanged for investment in U.S. manufacturing or for military cost sharing. Trade and defense will move as one instrument. Third, reserve asset reform. The U.S. could issue ultra-long-term bonds to its foreign creditors, century maturities, effectively locking in funding while weakening the dollar gradually. This would be the financial architecture that completes the plan. And finally, the reshaping of alliances. A three-tiered system is emerging. Green nations, strategic allies with privileged access. Yellow nations, neutral partners under review. Red nations, rivals facing controlled exclusion. This is the new world map, drawn not by geography, but by trust. Section 7. The risks no one can model. But for every policy plan, there's a market response. If currencies overshoot, capital may flee. If tariffs overheat, inflation could rise. If allies resist, blocs may harden. The blueprint assumes cooperation. But history rewards self-interest. The question isn't whether the U.S. can restructure the global system, it's whether the rest of the world will let it. And inside America, politics is the wild card. If prices rise before factories reopen, patience may vanish. Restructuring a global order requires domestic stability, and that's never guaranteed. Section 8. What the future holds. If the plan works, the world's currencies rebalance, manufacturing returns, and America reclaims industrial sovereignty. Trade aligns with defense, not ideology. And the dollar remains global, but fair. If it fails, the world fractures. Nations race to protect their own currencies, supply chains, and capital. The dollar becomes contested ground. And globalization gives way to permanent economic blocs. Either way, the reset is already underway. We are living through the early chapters of a controlled deconstruction of the post-Cold War trading order. Closing. The quiet revolution. The blueprint we explored wasn't just a report. It was a trigger. In episode 1, we studied the theory. In this one, we saw the first shockwaves. The next stage will test the limits of markets, alliances, and patience. Because you can't restructure a system built on imbalance without breaking a few pillars along the way. The future of trade is no longer about efficiency. It's about sovereignty. And the question now isn't whether change is coming, it's whether anyone is ready for what comes next.